We've got a really interesting segment for you today as we are talking about the case for silver. You've seen it all over different boards. If you're watching the news, you see the case for silver. You see the big short squeeze of silver. You'll see the Redditors saying, no, there isn't a short squeeze. And then you'll see others saying there is. We're going to get to that specific topic in just a moment. But moreover, it's the reason for why you should be looking at silver as an investment based on what's happening with the actual shortages of silver within the marketplace. Is there manipulation that's going on? Is this something that should be an investment within your portfolio? All those questions and answers are about to come. And to do that, we've got Chris Marcus. You're the founder of Arcadia Economics. You spent 2 years as a bond rating agency for Moody's. You have an MBA at Wharton. You spent 7 years as an equity options trader. And also in 2012, create Arcadia Economics. And then we have Peter Clausi. If anyone's seen videos with myself and Peter, you know you're about to have a lot of opinions coming up and a lot of good ones too, because he has spent the last 30 years within the capital market space all across the mining world, but more specifically sits as the VP of capital markets for Silver Bullets Mines, which is a silver-based company that we're going to be speaking about a little bit throughout this as well.
All right, let me start on silver. My pet peeve in silver is people who talk about the silver-gold ratio like it means something. Oh, the historic ratio is 37 to 1, and currently it's 128 to 1. If we all know about the silver to gold ratio, then it's meaningless. It's like going to Vegas and betting the odds. Those aren't really the odds. You're just betting what the odds makers think you think the odds are. So if you're going to bet the silver gold index, you're actually playing against every other investor, not an abstract concept of the ratio. That's my pet peeve for the day.
That's what grinds your gears, eh? Very interesting. That's what we chose.
It does.
Brandon, you want to discuss the gold to silver ratio for the next half hour?
No, we've heard that one for a long time. What I would like to discuss, though, Chris, you do a lot of work within this space. If you don't mind, just very quickly, if someone was to ask you, what would be the case for silver, what would you tell them?
I thought Peter was going to answer that question. I thought that's what he's here for. I was just trying to get into my shirt on the contest.
Yeah.
Let me change that question. Chris,
Sure.
there are actually two silver markets. There's the paper derivative market and there's the bullion market. Which one are you an investor into and why?
I like real silver because at the heart of it, why silver? I mean, it wasn't like I, had some fetish because like someone dropped a gold bar in my head while I was, in my crib or something. But I guess once I stopped back during the housing bubble, while I was just finished Wharton, sitting on a trading floor, and things melting down, I had no idea it was coming. And that was when I was introduced to Austrian economics and like, I don't know, maybe just looked at the debt clock. Thing was melting down. Of course, Helicopter Ben came along printing it up. And fortunately, I had some people that were kind enough to take me aside and say, Chris, everything you've learned is complete bullshit. So if you want to know how it really works, here's how it goes. Then, here are the tricks Wall Street uses. And I was like, wow, that's pretty cool. I mean, because when you actually understand the Austrian view of the interest rate cycle and what happens when you print money and how you might expect logically something the opposite when you theoretically unprint the money happens a lot less often. But once you see this and then you understand why anyone who understands that or anybody has any clue what the Fed is actually doing, they all talk about gold and silver. And then the bankers that get caught stealing from the market every couple of months, they all giggle at the guys who get the stuff right. And you don't fortunately have to take my opinion for any of this. You can watch The Big Short, or even better yet, you could just read the LBMA. That's the London Bullion Market Association, made up of most of these bullion banks. And they talk about how despite, that silly social media frenzy and alien hunting keyboard thumpers and Reddit forums and whatever that made a lot of noise. Although, ironically, a couple months after that, the LBMA, which publishes most of the market data, said they were basically running out of metal with that pace. They said they would have run out of metal within weeks.
Because people were taking physical delivery of their bullion, not just buying paper.
Yes. And actually, Peter, it sounds like you're well versed on this because I have many other questions because You had Jeff Curry of Goldman Sachs go on TV February 2nd and February 4th say it's impossible for there to be a short squeeze because of position limits. He didn't mention that Goldman Sachs routinely violates those position limits, or that it looks like Goldman may have actually been short silver while he was saying that. But that aside, he said there was no issue. The flows weren't that big, despite SLV basically tripling what had been the previous record until it was beat on January 29th. And then,
Right.
so in terms of one-day inflows to those silver trusts, previous record going back to when they were, when Jesus or whoever, like the dinosaurs were rocking the planet, the record was somewhere, it was slightly over 20 million ounces of one-day additions. Friday, the January 29th, it was about 34 million ounces. And then on, February 2nd, day, the price of silver fell 10%. 61 million ounces were reportedly added that we can just trust that JP Morgan put in there, despite no one I know being able to figure out how they did that while the price fell 10%.
So
Jeff Curry said these flows weren't even that big. But then why was Jeff Curry of Goldman Sachs, who's an authorized participant for SLV and several of the other trusts, changing the legal language in the prospectuses on February 3rd, which they didn't tell anybody about? I actually called iShares February 5th, spent 40 minutes trying to find the audit, their own investor relations department. They still can't find it. And I've called a couple times since then. They didn't tell me about the changes. Jeff didn't mention it on February 3rd, but he talked about how it was impossible to have a short squeeze February 2nd and February 4th. And then a couple months later, the LBMA says we were weeks away from running out of metal. So that's, Peter, do you know the answer to that?
Well, I do, but let's go, now that we're up close looking at the trees, let's step back and see the whole forest.
Yeah.
In 2008, I learned that for every $1,000 of derivative paper, there was $8 of a physical real estate asset backing that up. The similar problem exists today with silver. Consider this a block of silver. You could have a put on it. You could have a call on it. I could loan it out. There's right there are three different kinds of paper against this one block. And it's much more complex than that in the silver market, where you have all kinds of derivative paper around a limited physical supply. And the way to break that cycle and get the price of silver to where it should be is for you to take that physical block of silver and put it in your safe at home. And what Chris is telling us about is the manipulations that these investment houses are doing to prevent you from doing that, because they make money off farting around with the paper. They don't make money off the physical silver. Right?
Well,
physical silver. Go ahead.
Well, Peter, you seem to have a far better understanding of this than any government regulators or bankers I've ever heard talk. So may I ask a follow-up question while I'm grateful finally someone who has a clue or saying anything that makes sense. It's very rare in the silver community, I've found. Can I ask another question?
Sure.
So this is yesterday's chart of the silver price and volume. So, Peter, would you say that the fact that the price fell from $27, it looks like, to $26.50 in about 12 seconds, would that likely have anything to do with the massive spike in volume you see at the exact same time? Is that what you were saying?
Well, with a background in science and a family in science, I would say there's a correlation between those two pieces of data.
Makes sense.
And that's very recent too. That's today, is that not?
That's yesterday.
It's yesterday.
Today it spiked higher. But the interesting thing is, if you have a spike higher and then a spike lower, if you slept through the whole thing, you might not even notice it. Yet if you had stop orders, you could get stopped out of your position in both directions. And actually, that's basically what Wall Street's been doing for the last 200 years. It's kind of, Peter, do Canadians know about basketball? I'm sorry.
Dr. Naismith was a Canadian.
Actually, you guys win the championship these days. So look at the smart-ass American.
Of course you watch basketball. If you're not remembering, actually, we are the reigning champions from 2 years ago. So not the reigning champion. We won 2 years ago. I forgot LA did it. LeBron, yeah, huge deal. So we absolutely do follow basketball. Although right
And
now we are going through
and
a rebuild.
basketball was invented by a Canadian,
That
Dr.
as
Tony
well.
Smith.
Now that I've gone up for my 360 windmill dunk and I've had the rejection of it in my face. So clearly, then you guys are probably familiar with Carl Malone and John Stockton. Remember how they made a career out of running the pick and roll for like 20 years?
Yeah.
That's essentially what Wall Street has been doing with the pump and dump for the last however long. Wall, I don't even know when they started this nonsense, but create volatility, use headlines, COVID on, COVID off. Price goes up, price comes down. Trade war on, trade war off. Price goes up, price goes down. If you're just holding a position, nothing happens. You don't have to care. But the more addicted people get to the Wall Street casino and the more they forget about the last time the same banks melted it down or the time before that the same banks melted it down. I
I
mean,
Yeah,
You
I
got to
agree
remember that.
wholeheartedly there, 100%. I've long said that people are always worried about these pump articles or these short articles, like in the small cap Canada. I look at so many times when you're looking at the Washington Post and the New York Times, all these different things, when they're reporting, these analysts, they're pumping and dumping on a scale so grand, people can't even understand that it's real. So I 100% agree with you. It happens everywhere.
You got to remember that investment bankers make their money off the trades. They don't make their money if you buy and hold. So, I was recently on a transaction where the iBankers wanted us to raise 5 times more money than the budget needed. So, why would we do that and dilute the shit out of the company? Oh, no, just do it at a higher price, more fees out of it, even though it had nothing to do with the company's business plan. Right? When we talk about Wall Street and Bay Street and House Street, these are actual people, not all of whom have your best interest at heart.
Yeah. Now, with saying all of this, guys, when we're talking about the case for silver and we're talking about investing in silver, there's obviously an opportunity there. Peter, what do you think that we were speaking this earlier? Where do you think that that opportunity is? Is it playing SLV? Is it going into a junior explorer? Is it buying silver bullion and keeping it at home? What should an investor take
Well,
from
I do
this?
admit my bias. I'm the VP Business Capital Markets and a director at Silver Bullet Mines. We have 5 silver mines going back into production in Globe, and Chris, with luck, will get you there next week for a site visit. Globe, Arizona is like Timmins, right? It exists to support mining. So I point out my bias there. Having said that, I'm in the deal because I like silver, and it's something I am committed to. There's something called the pre-production sweet spot. There's somebody on the internet who invented that term. I forget who it is. So whoever it is, I'm giving you credit now, even though I've forgotten your name. Sorry. The pre-production sweet spot is when you've incurred most of the costs in building a mine, and
I
now
think
you're
it
just
was
putting.
Jeff Clark, and although I think the Jeff added to it, I believe it was Lobo Tigre, Louis James, who did the initial research. I would
Okay,
say I'm about 73% confident in that
the independent,
forecast.
the independent speculator, right?
Yes, yes.
Okay, yeah, that's it then. So Jeff, sorry, and thank you. The pre-production sweet spot, all the cash has gone in. You've de-risked the project. Now it's just getting it open. The PPSS, and that's where this company is. I think that that has the best leverage. If silver triples, you've made 3 times on your money by taking physical silver. But if silver triples and you're in production, your costs are fixed, which means your profit triples. These companies are valued as a multiple of cash flow. So if your cash flow triples and you're trading at 6 times cash flow, you're looking at an 18 times win in your stock price. And Chris, all due respect, I don't see us doing an 18 times win in bullion silver from here. I don't see us getting to $160, $180. So the best leverage is in a pre-production silver company, in my opinion.
Interesting. Now, what about for all those investors who are using SLV and they're taking options of this? Maybe they're self leveraging themselves against that. Is that not an opportunity as
It
well?
is, but I always look at the risk return matrix, right? If you invested all the cash in a mine and now you're just putting it into production, your risk is low, your return is high. Options on SLV are high risk, high return.
Yeah.
So if you can take that return as long as you're prepared to take the loss that could go with it.
Although I would re-raise Peter 2 ounces of silver that I could introduce some risks to SLV that probably he's not even aware of.
Probably could. So what is it?
Well, Brandon said he wanted to keep the show to under a half hour, so really, I don't know if we can cover that entire topic. But just in terms of SLV, for example, how many people would you think would be aware that after at least an hour and a half in collective conversations on the phone, I still can't determine if SLV actually is audited? Their representatives have an awful hard time finding it. I'm guessing most SLV investors don't know that if you call iShares and ask them if they think it's a conflict of interest, that you know who actually adds or subtracts the metal that they say goes in or out.
You mean physically or on paper?
So when let me take a step back. Forest trees, as Peter was saying earlier. So I'm starting to get the hang of it. I'm a rookie. Peter's the old business veteran. He's been around since the silver boom of the 1820s and all that, so he knows the tricks. I'm just the young buck on the corner. Um, but let's say SLV on the day the price of silver fell 10%, February 2nd, which I call Silver Tuesday, the new greatest crime in the history of the silver market, which requires some competition. SLV reported adding 61 million shares. So I could and
All right, ounces.
Yeah.
Right, 61 million ounces.
well, there's each share is actually I think it's like 0.93 ounces to cover expenses and fees. And it's interesting if you go to the prospectus and search for audit, you find a lot of things come up about the audit fees. Yeah, I haven't been able to get a copy of the actual audit yet, but I'm wondering how do you add that much silver on the day the price falls 10%? Ask David Morgan. He can't figure it out. Rob Keynes of Gold Silver Pros, former professional auditor, now studies gold and silver. He can't figure it out one after another. I can't find anyone who figures it out. So that's why I called them. And I said, when you said you added 61 million shares, does that mean, I was thinking, I don't know, maybe they're working the order. You know, they got like a couple bids out here or there. She says, no. If we're adding shares, the silver goes in that day. I'm thinking, okay. And I asked, well, who does that? Anybody want to take a guess?
No.
JP Morgan. Or no, she says the custodian. Now I know who the custodian is, but just because it was kind of fun, I'm like, oh, who's the custodian? JP Morgan. Oh, okay. So, and I said, with all due respect, they just got fined. They paid a $920 million settlement, I believe is the technical term, last year for manipulating the price of gold and silver on hundreds of thousands of occasions, CFTC's words. I'm like, do you think is that safe? She's like, well, I get what you're saying, but I really can't comment on that. Well, you're the investor relations. Who can comment on it? In fact, here's a fun little game. Call iShares, call JP Morgan. If anybody gets anybody in any of these institutions to comment on it, please call me. I'll pay you in silver. That would be a scoop I could break on my show. And then I'm saying, well, I'm like, okay, how can I see the audit? And she says, I think there's something in the Edgar's SEC database.
Wow.
And that was the moment where I'm like, okay, I think this might even be wilder. It was like the investor relations. So this is after they just added 120 million ounces in 3 days. Keep in mind, that's just for the ETFs. LBMA says they only had 360 million ounces left. So do that a couple more times, they're out. And once you add in the physical, God only knows. I had one bullion dealer said that was the most silver he ever sold in a single day and the most phone calls. So who knows how much the physical demand was. I don't know. Maybe eating that 360 million ounces would have taken another week. But through all of that, it didn't seem like all these people buying those SLV shares were checking for the audit before they purchased because this woman couldn't even find it. And I said, ma'am, I was honest. I'm like, I have a show. I report in the silver market. Can you like check? I'll wait on hold. I want to make sure I'm getting this accurate because I think this is significant information given that we just saw the price of silver fall on what turned out to could well possibly be the single greatest day of silver demand in the history of the financial markets. You don't know how that happened. I'm asking for you for an audit. You tell me there might be something on the SEC's Edgar database. So she puts on hold, comes back. She gives me an inspection letter, which is not an audit, but basically says the last time a count has been done, that basically someone aside from JP Morgan has looked there and put their name.
Oh, I'm
Letter
not
was
going to want to hear this, right? How long ago was it?
Well, Peter, as an executive in the mining space, I think you and your lawyers are actually going to love this, as well as a bunch of other stuff I found and have written in a report that I'm happy to make available to the people listening today. This letter is dated March 20th. And I'm thinking, March 20th of last year. What was happening then? I'm like, wait a sec. Wasn't March 23rd the day the EFP gold market broke? Bridge between London and all heck broke loose in the gold chart. Look at the gold chart of March 23rd, 2020 sometime. And I look it up. Yeah, that was the day. I wasn't imagining it. HSBC, I believe, reported lost $200 million that day. CIBC, another 60 million. I think there were plenty more losses. The banks don't really tell, as we're learning from Credit Suisse and Arch Egos right now. But I'm like, and wait a second. I'm like, and the next thing that pops into my mind is all, because Peter knows stuff like this. And I was on a trading floor. So I'm like, was that March 20th? I'm like, tell me that wasn't a Friday. Because Peter, you remember that old trick? Like when a company really fucks up bad, it's like, well, we'll tell them after the close on Friday.
Yeah.
Hopefully they drink enough Friday night in shock and they've forgotten by Monday or they're not as pissed off. Sure enough, March 20th is a Friday. So the last last inspection, they didn't even put the whole report, just the letter showing when it was theoretically inspected. It was the Friday before the gold market broke. But it gets even better. The actual count was completed on March 6th. Peter, do you know what happened to the silver price between March 6th and March 20?
Actually, I do, because that was PDAC 2020 in Toronto, first week of March. And I was specifically looking for a good silver deal, and I couldn't find one apart from some crap in North Mexico. So I had an eye on the silver price, and it had a good March.
Yeah, and actually, I'll bet hopefully you scooped it up the day that silver went below $12, even though, as you could probably speak to at a higher level, the ballpark is the average silver mining company around there, $15, $16 cost of production. And Brandon, here's a real stunner that maybe one of the CFTC commissioners will comment on, given their transparency. Maybe we'll hear about this one in our lifetime. But actually, on the day that silver goes below $12, once again, SLV mysteriously, they're adding big chunks of shares. I thought there were some conflicts of interest. I told this to a friend of mine who's a fund manager. I said, if you owned SLV shares on behalf of your clients or for yourself, now that you know what I just told you, and this is just the tip of what I found since then, I said, what would you do? And he just says, I would sell. I would have to sell. That's exactly what he said. Yeah. I wonder any financial advisor who knows that and they leave their clients in SLV, or I'll speak for myself. I thought if I found that out and then I went on a show, said I was a silver analyst, told people to buy SLV and didn't mention that, I should be fined or arrested.
Yep. And let's be clear here. I know a lot of what Chris is saying is a little bit shocking. We're used to audited financial statements and CEOs shining up with their hair all glossy. And some of this sounds like, you got to be shitting me. This can't be real. Check out a gentleman in Australia named John Adams. John has been a thorn in the side of the Perth Mint for some time because he says the Perth Mint is short silver. And the Mint says, oh, no, we're fine. Here's a picture of all of our silver. Turns out it was a picture from a couple of years ago. So John has been all over the Perth Mint to the extent Perth Mint had Dentons send him a cease and desist letter.
That was Kitco that sent this cease and desist letter.
Sorry.
Although Perth Mint, that is certainly another institution, because I know John and he was telling me a lot of stuff, and I'm hearing the exact opposite from the Perth Mint CEO, Richard Hayes. And one night I was out walking my dog and I'm thinking, I wonder if these guys in Australia are open right now. And then when I started mentioning how what Dick was saying doesn't add up to what the customer rep I was saying, and that frankly, I was hearing a lot of people saying things that would sure make it look like he lied intentionally. As I started pointing the discrepancies out, again, there was no comment. I said, would he like to do an interview and address these statements that refute what he said publicly? One point she actually says, well, he did his interviews and now he's done. Oh, so the man went and lied. And now that he got caught, he won't show his face again. And instead of showing a picture of of a pile of metal that doesn't address any of the questions of whether things are leased, or why customers were sent, why are their customers sending me emails to answer about the troubles they're having and how what Dick Hayes is saying publicly
Right.
is in contradiction with why are they asking me? And how
So
come they didn't address John's questions? Because he has a lot of valid ones. And um, if
he's
you
been
want more
publishing.
detail of the evidence that I have, you can check out the Sprott Money clip from about 2 months ago. I talked about it plenty there. And anyone figures out an answer to that anytime, let me know.
And Peter, I
John's
got a
been
question
publishing
after you as well.
emails from clients and comments he's had from his clients where they've tried to get physical possession of their silver, and they've been told by the Perth Mint, sorry, it's unallocated, so you don't get any silver. But here's your piece of paper.
Now, an interesting question though, because it sounds like this, like people have been speaking about this for a while. I haven't heard this angle to it, so I'm actually very intrigued by it. I know some people who may not have heard silver before are like, what are they talking about? But I'm reeling that in for a second here because the interesting part is if for whatever reason, let's talk hypothetical. News agencies, different people are actually trying to cover this now and say, wait a second, is there something up front here? Like what is going on? If they are found guilty of not actually putting that silver there or not actually putting that amount of silver there, is there a ripple effect that would happen on the price of SLV? And is there a ripple effect that could potentially happen on the price of bullion? Would that send shockwaves throughout the market, or is this something that just swept under the rug and we just forget about like pretty much every other scandal we hear?
Chris, you can answer this, but I want to add one fact first to your question, Brendan.
Yeah.
Silver today is $27 US for paper. If you try to log on and buy physical silver, it's $42 an ounce to buy physical. So that has to compress. And by taking physical possession of your bullion, you compress that market. So, Chris, over to you.
Well, Brandon, I would say the answer is the first option. When you have a Ponzi scheme and then you lever it up and then you try and hide it, and then the calendar turns to 1974 and you tack it on and you go through some stagflation and you send Oliver North to, sell guns to Iran, the supposed boogeyman terrorist, while they're, running rebels around Nicaragua. And silver spikes up to $50 back then. And, because COMEX and the CFTC changed the rules, screw their customers and constituents back then. And, you didn't have the internet, so it was a lot easier to lie to people. It gave you another decade to, as described in Liar's Poker, create the mortgage junk bonds, collateralized CDOs, that stuff. That worked out well in 1987. And, you got internet bubble, long-term capital. What's the solution to that? Oh, when that bubble collapses, let's pile on more leverage. Then you get the housing bubble. Sure, it was a coincidence that started unraveling right when Greenspan started taking rates up from 1%. Sure, it was complete conspiracy that despite Ben Bernanke's circle of virtuosity promised in his Washington Post op-ed that any day now it's going to be fixed. But here we are, what is it, 10, 11, 12 years later, we got interest rates up to 2.5%. In 2018, the whole thing melted down. Now the best they can do is have Janet Yellen like rumor gossip. Oh, well, we're going to raise rates, but you get that headline, and then the next day you have the headline that maybe she's going to raise rates in 100 years from now. So you get a nice pump and dump on that one. But here's the thing: you look through history again. Don't take my word for it, but paper currencies, I don't know of one that's ever survived. And eventually you see gold and people flock to gold and silver. And that's like, oh shit, why is everybody going gold and silver? And then there's some break point and they realize, oh, well, these guys have been counterfeiting the money. And then one day, so that's the thing with a Ponzi scheme. Once you see the evidence once, you can't put the tree back into the acorn. So that's why Brandon, I'll be happy to send, and if you want to put in the description of the video, the file of evidence where I ask questions that I've publicly asked to the CFTC, the regulator that's allegedly regulating this. Although, for some reason, their commissioner, well, he won't even comment if he reviewed the evidence that I sent him days after this happened. They haven't. The CFTC can't explain how the price falls 10% on such a great day of demand. They can't even comment on whether they've reviewed my evidence. But the commissioner can go to the Boca Raton Futures Conference and talk about how the market structure tamped down the price and how somebody acted to do this and that to control the price and the volatility. And I thought that's unusual language for a commissioner who's supposed to be regulating a free market. What was and if people bought so much metal that they were running out, doesn't the price go up? What is the concern? That's how a market works. Yet, despite a historic buying spree, the price went down. So there's a lot of questions that I've called and asked JP Morgan. I offered to ask them, give them a public chance to defend themselves. They can't answer it. iShares can't answer it. CME can't answer it. CFTC can't answer it. And I'll be happy to share the file that actually does answer it.
Yeah, no, I'd love to hear it because you touched on what I've been saying ever since I went to business school back in 2008, and I started reading into some certain things, and it actually is perfect. It happened right during the financial crisis. So I got to speak to some really talented minds while it was all unfolding, and ever since that moment, I started realizing something very, very obvious: is that all of this is a game. Don't ever think it's fair. Don't ever think that they've got your best interests at heart, ever. As soon as you realize that, as soon as you realize it's a game, you can start asking the right questions of who are the players and how is the game played. Because so many investors who are getting into this, or many of the people who may be watching this are newer investors, they think, oh, we're taught the markets are fair. Analysts are always true. Why would the government ever do this to you? Did you not watch The Big Short? Did you not watch what happened and everything they did for you? They stole all your money from you. Then they made everything default. And in the very end, they destroyed all your pension plans. They destroyed all of your wealth. And guess what? You bailed them out.
Thank you, sir. May I have another?
And it just keeps happening over and over again, right? So I don't mean to say this as everyone's just like, oh, I should never invest. No, no, no. You can know the games and play the games. Many people do that. But when talking about the case for silver, I still think when it's bullion, when you're looking into these explorers, I do think there's a lot to be had there because silver is still a massive demand, both in it's an incredible conductor. Peter, this is where you go on for ages, and I love it. The amount of uses we have for it. So don't think that we're saying this and like, oh, there's no point of investing. No, still invest. You have to, but you have to understand you are going against a system that is against you. 100%.
2 points. Annual production of silver is about 1 billion ounces a year, consisting of 800 million new and 200 million recycled, more or less. The other point is, if this all seems far-fetched and you're sitting at home watching this thinking, these guys are nuts. There's a great book from the early 70s called Diary of an Economic Hitman. And it was a guy who was hired by the federal government. Chris is nodding, he's read it. He was hired by the US government, as were many others, to go around the world and screw other countries with debt. Let's overbuild that hydro dam. We'll loan them the money. They can't pay, and we get influence over them. It was republished a couple of years ago, and one of the most eye-opening books I've ever read.
Can you say it once more again?
Hitman.
Yeah. Okay. That's something I want to be able to read into because, again, folks, if you're watching this, you're an investor and you're just thinking like, oh my goodness, what on earth these guys are talking about? Like I said earlier,
conspiracy theorist. That's only fair to mention. I did catch him hunting. I called him last week. He thought he had hung up, but I heard him hunting aliens after.
Hey, if there's enough, well, that's kind of interesting. That doesn't make sense. Hey, that's kind of weird. If you get enough of those, it's at least plausible that what you're thinking may be happening. Continue to look into it. We can get into governments. We can get into other things. I will start going off on a tangent if we do that, though. But I wanted to speak about the fact that, look, there's absolutely an opportunity here. You should be looking into EV metals, precious metals, base metals, whether you're talking about manipulation in the markets or anything. These metals are still in demand. And as we continue to electrify the world and make everything, smarter, better, faster, you need these metals for that. So that's why we really want to hit this. But we also completely went into this completely unstructured because we wanted to have stories like this because I'm fascinated on my side because half the stuff you just said there, Chris, I didn't know. So I love it.
Most SLV and silver investors don't know. And I'd bet you an ounce or two that I have a few more nuggets that probably people have no idea about yet. Perhaps in closing, I would suggest you said that people have to invest Well, I guess anything that you have of value is capital. I mean, your toaster oven, that's an investment in your breakfast in some sense. I would just to be more specific, I would say you don't have to invest in the stock market casino. And when people go to Las Vegas, hey, maybe they're like, hey, I'll play around with this money, I'll watch a show, I'll have fun. At least they have a more realistic expectation of what they're going into. So there's a lot of different things you can invest in. There's silver, but I mean, before you have silver, invest in yourself. Figure out, rather than being dependent on one of these corporations that many of whom are into some Weasley stuff. I find, if you have a passion, I think everybody has a passion. That's what I did. I love this silver stuff. If I was able to figure out how to make silver manipulation into a business, anytime you invest and learn how to express your ideas, or maybe someone who has a business, or if you think Peter knows what he's doing out there with his compass and shovel in the woods, then there are businesses that are looking for capital that you don't have to chase the latest tech stock that fraudulent banks are pumping. So, I mean, yeah, you can invest, although I guess what I help with is, if you are going to invest in these Wall Street markets, know what you're getting into, because the people who say they're regulating it and saving you, I can give you evidence that that's not the case. And in that movie Rounders, where Matt Damon says, if you go into the game and you don't recognize pretty quick who the sucker is, then you are the sucker. I would suggest that's how Wall Street views most of the public. And which is not to say it's not worth playing, but if you're willing to take the effort to understand how the game is rigged, that's what I enjoy doing. How it's kind of fun is that you can turn the tables so that people like Jeff Curry of Goldman Sachs, or some of these other guys that lie and influence and impact markets in a illegal way, that they become the sucker. And I actually had the pleasure of leaving Jeff Curry of Goldman Sachs an email. Any of the people I've talked about publicly, I've gone out of my way to speak to them, or at least leave a message, say, hey, I publicly accuse you of fraud. I have other things to do. I understand the risk of doing that if it's not warranted, but I give them the chance to comment. So far, I can't get anybody on the phone, and I can't get any answers. And if anybody is interested in challenging my evidence in the discovery phase, you can go to arcadieconomics.com and have your lawyers contact me there, and I'd be happy to facilitate that.
So let me wrap this up, Brandon, with another music reference. By the way, good reference to Animal House earlier, Chris. I like that. Tom Morello, Rage Against the Machine, toured with Springsteen, has a guitar, and on it he has written, "Arm the people." And maybe this is what Chris is telling you. It's up to each individual. Hey, nice guitar. Each individual investor to be smart, do due diligence, arm the people. Don't blindly trust. Think for yourself.
Yeah. Need some background music there, Peter? I actually did play
I
in a Bruce Springsteen cover band for a couple of months. So
Really?
I'll practice and be ready next time.
Nice.
All right, guys. Well, hey, I appreciate it, and that background music does work. It's this the send off. So I appreciate it very much, guys. There's a lot of great information in here, and honestly, for investors listening to this, it is a wake up call at times. You have to understand these things aren't fair. You have to understand there are mechanisms that are against you. But once you see them and understand it, it's okay, because you can still work around them. You can play with them at times, as long as you know you're playing a game. It's not fair. And you start to ask yourself, who are those players and how is the game played? You can start making money within this sector and within the stock market. Absolutely. So, guys, thank you so much for your time. I appreciate this. Very quickly, Peter, where can people find out more information about you? We already heard from Chris with your company, and we'll have it in the description as well to look into that document. I'd love to do that. Peter, really quickly, where can we look into more information about you?
I guess LinkedIn, like any dating site, most of it, what's there is true and only the good stuff. But go find me on LinkedIn.
Can we order our Peter Clausi shirt there? Where does the link for that? That's the link.
That's called Maxwell. Maxwell Clothers.
All right, I'm gonna go check it out.
All right,
guys.
Thank you for your time.